Welcome to Investors Insights, episode number 192. Today we will be discussing taxes and Thanksgiving. And also, don't forget to connect with us on Facebook, LinkedIn, and Twitter. We'd like to continue the discussion there. So let's get right to the topics that are important to today's investors.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Plan Partners.
Good morning, gentlemen.
Morning, Greg.
We got a happy holiday week here with
Yes,
Thanksgiving quickly approaching. So as we were talking earlier this morning, Bobby, you brought up some things that we might want to be thankful for as investors and portfolios. So talk about that.
A lot to be thankful for this week of Thanksgiving. To start off with, the uncertainty around the election is behind us. Very thankful for that.
Yes.
And then also last week we had some very positive economic news. Housing starts jumped 25% in October. Jobless claims hit the lowest level since 1973. And then retail sales had their best 2 months in the past 2 years. So on top of very positive economic numbers coming out recently, and then also with the possible stimulus, infrastructure spending, we're very positive on the rest of the year, fourth quarter, and then also 2017. So we're thankful. A lot to be thankful for the most recent numbers we're seeing.
Absolutely. And another topic that came up was taxes. Thankful about the debate on taxes. And Trey, you brought up some interesting points about across the globe that are all of a sudden taxes have become a conversation. Talk about that.
That's right. Rarely do you talk about the good of taxes, but the good of taxes typically only when it's going down.
Right.
So we have a chart that shows where the U.S. stands compared to other developed countries. The U.S. is at the top, has the highest corporate tax rate in the world.
Right.
So there's been a lot of talk, and I think there's been a lot of excitement in the market about a corporate tax reform in the U.S. Well, I think the words got out. That's spread across the globe. We're seeing, and so not to be outflanked, Teresa May has come out, the Prime Minister of Great Britain,
Right.
and wants to lower their corporate tax rate to the lowest in the EU, possibly below 15%. So you see, what we're hoping to do is lower ours from 39% down to around 20%. Well, they don't want to get outflanked, so they're going to go lower than that.
Right.
And add on, so...
And then let me ask this question. The proposal is 20%, but there's also been discussion in the United States
Of even lower.
That's so now you've got Great Britain coming in here also.
That would be great. That could be a great competitive push to us to maybe go even lower.
So you're telling me there's pressure to bring taxes down. Is everybody hearing this?
Which taxes go straight to the corporate bottom line. Add to that also the second highest tax rate we see on our list is France. France had had a primary over the weekend where Nicolas Sarkozy, the former prime minister of France, got walloped, came in third in his Republican Party at 21%, to a much more business friendly and less regulatory friendly leader of the Republican Party. That person will now move on to a primary on November 27th. And so our push is leaping across the pond to maybe spreading to Europe, where France maybe sees us go below them. Right. They're starting to put people in power that maybe push them back below. Right. And they'll have an election between, the former Socialist Party, who's the current leader of France, isn't even in the election. There's the Republican Party, and then there's the far right, I'd say Donald Trump of France. Very, very border security, wants to leave the EU.
Right.
And that'll be interesting. How the corporate taxes seem to be going from. I don't think anyone's talked about it as a campaign issue. It was something you didn't talk about because these big evil companies, and now it's the front page of campaigns almost.
Right. In other words, the politicians are talking about how to get elected.
Exactly.
They're actually hearing what people are saying.
Which I think we can be thankful that our election's behind us, as opposed to France is ahead of them.
Right.
And now, because of our election, the world is talking about a more effective tax policy.
I got you.
Which I think we should all be thankful for.
And in our debates and discussion this morning, then Ashley, you interjected here, so continue that theme of what you interjected with once Trey presented this.
Yes, absolutely. I mean, you're going towards a more populist, open, free movement, and we've all seen, and we included this on Investors Insight last week, about 10 things that Trump can attack fairly quickly.
Right, because that's one thing. When you mention taxes, people go, some of this is going to take some time to do.
Very true.
Exactly.
And that was the point you made. So
exactly.
Go ahead.
As an example of the Affordable Health Care Act, it would take you a long time to repeal it. But what does not take you a long time is to go through what we call the budget reconciliation process, which basically built the Affordable Care Act. It's much, much faster to deconstruct it that way because the important political point is you only need 51 votes in the Senate and it's not subject to filibuster. So if you look at the list, the top list Trump probably should attack, they would be Affordable Health Care Act, rollback regulatory control like EPA and others, and taxes. Those are easier to get at.
Well, and I think we need to make a point here. This isn't in terms of political preference is what you're talking about. This is just where we are, and if these things happen, we are analyzing how that will impact our clients' portfolios.
These are mechanically easier.
Exactly.
Mechanically easier.
Yeah, good, bad, or indifferent. This is the reality we have to live in right now.
And the larger control of that is that we're seeing this movement towards perhaps, hopefully, to be thankful for more economic freedom. If you go back to the year 2000, researchers look at this, how much a government will intervene in an economy. And they'll rank countries from like 1 to 100. The rank of 1 is basically the least amount of government intervention or the freest economy, if you will. In the year 2000, the United States was second on that list. Very open, very free.
I think you mentioned that number 1 was Singapore.
Right. And then in addition to that, if you look at, we've fallen in the last 15, 16 years through 2 administrations, 3 or 4, both parties. We've fallen to 16th. We're in the middle of the pack. But the opportunity for markets is for the new administration to take some of these mechanical issues and move us back up. It's a lot easier to move from 16 to 5 than it is from 2 to 1. So we have some opportunity there because we've been trending in the wrong direction with that.
Right. And I thought that was excellent points. The other thing throughout our vlogs, we've said that the world needed not only monetary stimulus, but they also need fiscal stimulus.
Yes.
And we're starting to see that, and that combination can be good.
Right, because we've got the Fed meeting coming up in December.
Right.
It really it might be the beginning of the end of monetary stimulus. So the U.S. needs fiscal stimulus.
Right. And on that note, if we see interest rates go up, there may be some thankfulness there, not only by savers, but also those that have pension plans that need rates to go up. So on that note, we hope you have a very happy Thanksgiving. We hope you've gotten information here that you haven't heard anywhere else. And as you have that family time together and everything, it'll give you additional topics to talk about how the world is evolving and turning here as we head towards the 2017 year. So we are very thankful for those of you that are clients here at Five Plan Partners and how you believe in us, and we thoroughly enjoy you, and we hope you have a great Thanksgiving to each and every one of you. Thanks.